Fair value gap is actually termed, or rather people take it as one of smart money concept tools, because for real, if you know the fair value gap, it will be easier for you to really execute trades. Why? The fair value gap trading strategy is very easy, and many traders think that that is actually a holy grail, because they think the market will basically go back to that level and fill that value gap. So guys, in this video, we're just going to focus on what we call the inverse fair value gaps and as well the fair value gaps. So there is a difference between the inverse fair value gaps and the fair value gaps themselves. Okay, so guys, I came across one great indicator in Tradingview.com. It is actually very brand new that will help us really understand the inverse fair value gaps. And so guys, without further ado, I would love us to really add that indicator on our chart so that we can basically talk about something we really know. So guys, just going to Tradingview.com, then on indicators tab, we're just going to type inverse FVG with rejection tier 4. You click on it, it's by Trading Forex. This is how it basically going to appear right on your chart. So guys, this is the indicator I'm basically talking about, a very great indicator, and I know you're just going to learn more. The different colors you can see on the screen, the arrows as well, we're just going to know more about it, and I know it will be easier for us to really execute trades when using this indicator. So guys, I know you're ready for this video, so I welcome you to Money Close Forex Education YouTube channel. Maybe it's the first time you're hearing my voice, I really welcome you. Kindly join us by subscribing to the channel, clicking on that red button written subscribe, and definitely you'll be part of this amazing family, because I believe and honestly enough, this is where you belong. If you're really part of this amazing family, I really salute you. Okay, so guys, let me talk about that indicator I have shown you earlier on, and basically what you're supposed to know about that indicator. Every level you saw highlighted, we have levels showing us the fair value gaps, and we had another one showing us IFVG. You understand me? The IFVG represents an inverse fair value gap. So I know you can ask yourself, what is the difference of all this? So guys, this indicator is made to look for inverse fair value gaps, or rather the IFVGs, and show rejection from relevant areas. So it's not only showing us the inverse fair value gaps, it also shows us rejection. So the fair value gaps are created when there is an energetic move that leaves a gap between the preceding and following candles wick. When that area is violated, we may consider that area as an inverse fair value gap. So I know now you have an idea what we mean by the inverse fair value gap. So we can treat it along the lines of support turned resistance. So that's the easiest way to really know, whereby a support has already been turned to resistance type setup with proper context. So guys, as simple as that, that's what you're really supposed to really know. Basically, if you can look on that level, we can see, like for instance over here, we had this support before and the price broke below it, retested to the level, it was unable to break above the level. Okay, so that's why it can actually be termed as support having turned into resistance. Okay, so guys, once a fair value gap is found with sufficient underdefined displacement, it is saved until price fully closes through that area, at which point it becomes an inverse fair value gap, which is also saved until price once again closes through the area, just as you can see on my chart over here. So guys, looking on this chart over here, you can probably see we have number one, a fair value gap at this level over here shown in blue color, and as well we have inverse fair value gap, which we are actually shown by level 2. So this is chart 1 and this is chart 2 over here. So you're supposed to know, number 1, that price has crossed through fair value gaps, becomes new inverse fair value gap, and 2, price closed through inverse fair value gaps and that get deleted. So when price closes through an inverse fair value gaps, it gets deleted. Where price closed through the inverse fair value gap, you can see at this level over here, and once price closed through the inverse fair value gaps, it gets deleted. That's what you're really supposed to know, and I know now you have an idea. And as well guys, users can select a specific time period from which to look for and save the fair value gaps, such as during the New York trading session in the following example over here. So guys, watch this closely. To those people who love trading sessions, you have an idea that you can actually select a specific time period from which you want to look and save the fair value gaps. So such as during the New York trading session in this example, this is August 23rd and we got the fair value gap over here. You can actually choose the day. The only thing you really have to do is making sure you know when the New York session is opening, you will find the fair fair value gaps on those trading sessions. So guys, lastly, users can enable rejections that look for swing lows in bullish fair value gaps or inverse fair value gaps, and swing highs in bearish fair value gaps or inverse fair value gap. In this example over here, it shows an instant of rejection from both a regular and inverse fair value gaps, meaning the pivot points were formed in a mutually shared area between the fair value gaps and the inverse fair value gaps. This is actually over here. So the arrows we were discussing about, they can basically show the swing lows and the swing highs depending whether the market is to the upside or to the downside. So in this case, you can see there was swing lows created in fair value gaps and the inverse fair value gaps. So guys, when you want to understand about this indicator, the secret is knowing the difference between the fair value gaps and the inverse fair value gaps. You understand me? And when you understand all this, it will be easier to know what this indicator tries to show us, because you know fair value gaps are very, very, very important, because you can see as well it is focusing also in knowing the fair value gaps during the trading of sessions, because in this case it is very possible for price to really come back to the level and feel that imbalance so that it can really move to the direction it was before. So understand what fair value gap is and the inverse fair value gaps, and I would love to repeat this so that you can really understand that the fair value gaps are created when there is an energetic move that leaves a gap between the preceding and the following candles wick. When that area is violated, we may consider that area as an inverse fair value gap, so treating it along the lines of support and resistance type setup with proper context. That's what you're really supposed to understand about the inverse fair value gap and the fair value gap, and I use this example to make you understand all this. So this example will probably help you understand the difference between the inverse fair value gaps and the fair value gaps themselves. It is very, very, very easy to understand. The only thing you really have to do is keeping on practicing, because practice makes perfect. Okay, so guys, let me hope you've learned something from this video. Success in everything you do. Subscribe to the channel if you haven't. Liked this video as well. So what do I say, guys? Bye bye. See you in my next video.